morning, everybody. Happy Thursday. It's August 14th, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. Little David Lee Roth there. Feels just like paradise, doesn't it? Or doesn't it? Got a rude awakening this morning with that PPI number that came out just about 10 minutes ago. White hot number. Good Lord. Look at that. Let's take a look at that there. 3.7% annualized on the core. Going the wrong way, obviously. I think Secretary of the Treasury Bessent suggested that the Fed needs to cut 150 basis points yesterday. Well, obviously that's not going to happen. I know that the futures market are predicting that there's going to be a 25 basis point cut next month in September's meeting, and they're also pricing in an October cut and about 50% chance of a third cut in December. Now, that was, of course, before this PPI number came out this morning. Also, understand this. This PPI number is always a volatile number. So we do get some disparities from month to month. Last month came in at 0. This month, on the headline, this month came in at 0.9. So if you average that out, obviously about 0.45 for the past 2 months. You can't look at this just as in a box of 1 month and say, oh, we're in big trouble. It certainly does point to the fact that tariffs are having an effect on producer prices, and they're having a little bit of difficulty trying to manage the price increases that are coming in from overseas. So this is certainly an issue that needs to be understood and needs to be addressed, and probably gives Powell more reason, Chair Powell from the Fed, more reason to step back and wait and see how things settle out first before making a dramatic move. I don't see 150 basis points coming in anytime soon. Maybe the 150 basis points are going to be coming over the next 18 months, but certainly not by the end of the year. And I certainly highly doubt, I don't even, the futures market isn't even pricing in 5 cuts now until the end of 2026. So that's something that we have to pay very, very close attention to. We'll be listening to Chair Powell next Friday. This piece of information is very important. It's probably going to skew his remarks next week at the Jackson Hole Conference with Wyoming. Is in Wyoming. This is the conference that is hosted by the Kansas City Fed every year, and we're going to be hearing a little bit more about what his views are on inflation. And the theme, of course, is on the labor markets, and we'll be talking a little bit about that, and maybe dialing in on some of the weakness that we've seen in the labor markets for the past couple of months. Of course, last week or 2 weeks ago, we saw the July July labor report, and the June and the May reports were revised downward sharply, and we missed on the July number as well too. And the Bureau of Labor Statistics chief was sacrificed for that report. So we'll see what happens. Again, I know the markets are reacting negatively to this number, as they should, right? Markets are up a lot this week. Had a huge day on Tuesday. We followed through yesterday. Let's take a look at some of those charts over here. And you can see here what I put up the S&P 500. And the one concern, if you want to have it right now, one or two concerns here, is the fact that the S&P 500 is stretched pretty far away from the 20-day moving average. Now, the 20-day moving average on the SPY comes in at 633. We're at 644 right now. So it's about 11 handles away from the 20-day moving average. And usually when we get that kind of distance away from the moving average, it tends to pull it back in. Remember something about moving averages. They tend to act like magnets, right? So when the price gets further away from the moving average, the magnet starts to get energized. It pulls that price back in. Now, that works when we're going up or when we're going down. So if we get too far down below that moving average, it also acts like a magnet, pulls it right back up, right? So I think that we're in a situation right now. I think the markets maybe need to, maybe I'm not going to tell the markets what to do, of course, but maybe in my opinion, maybe need to have a little bit of sideways action over here. We've had a lot of enthusiasm and participation in this market, certainly recently, last couple of days. Look at the strength in the Russell 2000, the IWM. Let's bring that chart up for a second here. You know, this is really impressive these last couple of days, right? But two big strong days in a row, of course, driven by lower interest rates, longer end of the curve with lower interest rates. Fixed income buyers are back and buying bonds, and we saw the 10-year, the 5-year, the 2-year yield all falling the last couple of days. And when rates are falling, that's good for what? Good for banks. It's good for home builders. It's good for financiers of debt. It's also good for small cap stocks, which can do better with cheaper financing, and especially if the economy is strong. Now we had 3% GDP coming in the second quarter of this year. That'll get adjusted in about a couple of weeks, upwards or downwards, but still, we still have the Atlanta Fed looking at 2.5% growth in this quarter right now. Now we're about halfway through the third quarter right now. August 15th, tomorrow will be the halfway point of third quarter. So we still have another 6.5 weeks to go before the end of third quarter, before we find out what's going on there. So good earnings last night from Cisco. They talked about some revenue finally coming in from AI, which is great for them. They're a little bit shy, I guess, on the guidance. The guidance was lifted, but it was probably not as much as expected. Look at this chart over here of Cisco. You can see the stock has made a nice move up about 7% since the start of August. So I suspect that, you know, maybe a little bit of a pullback was in order here. It's had a really good run since April. It's up from 52 all the way up to about 70 something. It's up about 40%. Good run for Cisco, and new all-time highs. So we'll have to keep an eye on this one. Later on today, we're going to have earnings from Applied Materials and a couple of other smaller names. Probably not going to be participating in that one this time around. But also want to show you another chart as well too. This is new highs, new lows. Look at that. Look at that big pop yesterday and on Tuesday, right? Above 100 and then above 195 over here. So that puts this indicator back on a buy signal. Right? This is an important short-term and intermediate-term indicator for the markets. And as long as we stay above 100 and don't break below 0, this indicator will be on a buy signal. So this tends to attract lots of big long-term money, which is like pension funds, mutual funds. This is one of those indicators that the big money pays very, very close attention to. It's the NYHL. So I bring it up from time to time when we have pivots, when we have shifts in this indicator. It is on a buy signal right now. Okay, oscillators. Let's take a look at those. Oscillators over here. You can see in the middle over here, the NASDAQ oscillator back in the green. 88 on the positive side. New York Stock Exchange 92. So we're not overbought here on the oscillators, which means that, you know, maybe we could, if they end up buying this dip here, we end up coming right back up again. Volume trends yesterday, not real good. They were stronger on Tuesday. They faded a little bit yesterday, which you kind of understand that, you know, most players don't want to be buying the markets up at near all-time highs. NASDAQ and the S&P 500, of course, hit those all-time highs on Tuesday. But oscillators still in positive territory. If they don't retreat down to the negative territory, that would be a plus for the bulls as well too. So as long as we stay in the positive territory for a little while, you can see it happen back in late April when the markets rallied off of that Liberation Day low. On April 2nd, we rallied up sharply over here, came back up here, and didn't really break below that 100 level on the New York Stock Exchange until recently, to the end of July. And of course, the NASDAQ was down in minus 370 territory. That was critical down there. It was an area where we hit back in April. We hit back in last December as well too. So we'll see if the markets can digest these gains from this week. Again, we're still positive on the week, super positive on the week, and we'll see if volatility fades. So one of the things that I'll be watching today, if you want to take a look at here, is the volatility of the VIX. See the big VIX futures spiked on that PPI report over here, and we'll see if it starts declining over here. So if volatility sellers are seeing this as an opportunity to sell volatility, well, we'll see the S&P futures turn around and start moving towards the positive, right? So we really have to see what happens over the next 3 to 3.5 hours and see how the market responds to this, right? If there's just nobody there buying at these levels over here, well, we're going to see some selling come in, and you got to have some protection on, have some puts on. I always have some puts on. Even a small amount of puts helps to blunt some of the volatility that we get in our portfolio. So that's going to be it, everyone. I'm going to lay it down over here. Don't forget, if you're in the Leaps Club, we have a Leaps webinar today after the close at 4:15 p.m. Eastern time. So be there, be on time. We're going to be talking about some of the recent trades that we've made, some new ideas, perhaps before the end of the year. And the performance, oh my God, the performance has been unbelievable so far in 2025. Can I show it to you? Leaps Club right here, down here on the bottom, versus the S&P 500. Let's compare. 88% for the year in 2025. 88%. That's not a misprint. We were down a little bit yesterday. We were up 3.4% for the week. And you can see that the S&P 500 up strong, 10%. Good year so far for the S&P 500. And the NASDAQ up 13.5%. Great year so far. Not anywhere close to what we're doing with the Leaps. So if you're in the Leaps Club, congratulations, you're doing great this year. So we'll talk about Leaps and talk about some opportunities coming up, and maybe even set the table up for 2026. So looking forward to spending a little bit of time with you on that today. So have a great day. Trade well today. Keep some protection on. As always, keep a lot of cash. Rotate your money. We're in the moving business, not the storage business over here. And I'll see you guys all back on Monday morning. Enjoy David Lee, and I will see you then.